Hello, everyone. My name is Barbara Armstrong. Thank you for joining me for this trade management mini session. Today, we are going to talk about a stock that we did 2 example trades on. The stock is Reddit, ticker symbol RDDT. We placed 2 trades on that stock on December 2nd. We bought shares of stock and put a target exit in, and we also bought a long call. So that's what we're going to look at today. If you are not following me on X, we're posting lots of great content there. I invite you to join me there. My handle is Barb Armstrong CS. And just before we go and look at these positions, I want to remind you that options carry a high level of risk and aren't suitable for all investors. You have to meet certain requirements in order to trade options with Schwab. We are using the paper money software application on the thinkorswim desktop. It is a brilliant place to learn and practice your trading strategies and make sure that you have a plan in place and know when you're getting out, whether the trade goes for or against you before you consider placing a trade in your live account. Know that past performance doesn't guarantee future success. How we wish it were otherwise. Okay, so let's come out to the platform and we are going to start with our chart. And when we look at Reddit, we place these trades. It's currently December 5th, but we placed these trades on the 2nd and they went up. The stock went up nicely for 2 days. Yesterday, our target was 158 and it went up to 157.75. So within 25 cents of our target. And today it's starting to pull back. But we had a nice profit on our trades. And so rather than risk giving back all of that unrealized gain, we were shy of the target. I chose to go in and exit the positions. And so, even though we have a target, it doesn't mean that it's all or nothing either. We ride to the target or die. We got close and we decided to exit. Okay, and actually it's currently trading, it's still the same day. It closed today at 153.09. But when we come to the monitor tab and I come and look at Reddit, we got out at 154.92. So if we want to compare these 2 trades, let me just bring up my drawing tool. And on this side, we'll look at the stock position. And you can see here, just let me change my drawing tool, that here was our stock position. We bought 20 shares of stock at 141.74, and then we sold it for 154.92. And so when we come down here and we say, well, what was our gain? Our gain here was 154.92 minus 141.74. And that came out to $13.18 a share times 20 shares. And so that was a total gain of $263.60. Whoops. Maybe it will only let me go so wide. So 263.60. Now, if I wanted to express this as return on risk, or I'm going to just to make it short, ROR, what was I risking? Well, we did have a stop in place, but if technically speaking, the stock could have gone to 0, or we could call this return on investment, because how much were we tying up? $141.74 to make $13.18. So if I divide one by the other, that was a 9.3% return. For a trade that we were in for 4 days, which is pretty stellar. And so maybe this might be more appropriate because we did have a stop in place. So it's not likely that, this stock could have gone to zero. But anything is possible. But our return on what we had invested was 9.3%, which is, like I said, I think pretty stellar. Now, if we come down here and compare this to our long call, and long simply means we bought the call. And I'm going to change colors here, but we can see here we bought this call on the same day, December 2nd, and we exited both these positions, on December 5th, so 3 days later. So we bought the January 17th call for $4.80, and then we sold it, just shy, because our target was 158. We sold it close to 153 or 155, so $3 shy of our target, for $8.25. And so how does that look if we come back here and we do our math? So we ended up selling it for $8.25 a share. Or, this was our it was $8.25 a share minus 480. And so that came out to $3.45. So $3.45 a share times 100 shares, or $345 was our total gain. Now, when we look at this as, a return on, you could say we were investing, we were also risking the entire amount that we paid to buy the call. So our return on our investment, or our return on risk here, because that's what we were risking, would be that $345 we made, or $3.45 a share, divided by the $4.80 that we spent to get in. And so that was a 71.8% return. And while we may look at this and think like, well, actually, we made more in total. Oops. I just wanted to put my dollar sign in there. I guess I'm not going to get that. We made more in total on the long call, but we didn't have a lot of cash available in the account. So we bought 20 shares. Had we been fully position size, we would have bought 35, and this number would have been 500 and some, like almost $200 higher. So it's not quite an apples to apples comparison, but had this trade not worked out as well as it did, we could have lost the entire, 480 we spent on the long call. And, come January, had Reddit been trading close to where it was trading when we bought the call, the stock would have been trading at the same amount, and we might not have lost anything. In the long call, we could have lost, the majority of, or all of, its value. So in this case, it was, a happy occasion for both trades. They both worked out swimmingly. And we would call this a base hit in our trading a smaller account class. In fact, 345, we'd call that a double. And so this is just a way of comparing two different strategies. There's no right or wrong answer, but just another way to look at it. So I thank you for joining me for this mini session. I hope you found it valuable, and I'll look forward to seeing you in our Trading a Smaller Account class. I will put a link into the December 2nd class where we place this trade, should you want to go back and review it. So take care, everyone. These are just example trades, not recommendations. We'll see you soon. Bye for now.